Before you start looking on your phone, before you talk to your realtor, there's one super important thing that you need to do before you start the home buying process. And I brought a good friend in to help me talk about that up next. Hello everybody, Dylan Onaka here from Coldwell Banker Merrill Realty, and this is Ronnie Strickler from HomeBridge Financial Services, and I brought her in today to help us talk about the pre-qualification process to get a mortgage, because you want to do that before you even start the home buying process and make sure that you can afford a mortgage and that you qualify. And it gives you a realistic picture of what you can afford versus what you can borrow, and sometimes those are two different things and you want to figure that out. The pre-qualification process also helps you figure out what kind of issues you may have with your credit or with your bills, and Ronnie can figure those things out and then help you figure out what you need to do to improve your position to borrow in the future. And most importantly, if you're ready to buy a home and you find something that you really like, sellers expect a pre-qualification or
a pre-approval, which is preferred, which is something that I'd be happy to help you with and to give you the definition of what the difference is.
Yeah, so you want to get this done before you're ready to move on a house, because sometimes you can miss out if you're not ready with this, and then it takes you a week or two to get pre-qualified after you identify that a home that you like and then another buyer gets it. So you want to start this early. And so Ronnie's here to help us walk us through the process and give us an idea of what it takes. And first thing is, how long does it take to get pre-qualified?
Okay, so as far as how long it takes, it depends upon the borrower and what their specific needs are. Are they first-time home buyer? Are they second home buyer? What is their particular situation? And the initial process doesn't take very long at all. I would have a 10 to 15 minute conversation with you, and we would go over some of your details. I have some scripted questions that I'll ask that'll help you give me the details that I need, and then after that conversation there's an email follow-up that gives a list of the documents that we'd need specific to you. This way we help narrow down, and we don't just ask you for everything in the world and drive you nuts, because we all hate gathering paperwork, just like at tax time. Applying for a mortgage can be very frustrating as well, so my job is to make it as simple and easy and understandable as we possibly can.
So what kind of documents exactly would you be looking for in general for most people?
Okay, so the generic stuff is typically we need 2 years of tax returns, federal tax return, not state, and we do need all schedules, all pages, 1099s and W-2s. Most of the time we will get them, but we won't get everything. Somebody will leave out a 1099 or W-2, and the tax document itself actually tells us the story of your financial history, your income, etc., where you derive your income from, and that will lead us to asking potential other questions as we go forward. So the typical bottom line is 2 years tax returns, 2 months consecutive, most recent bank statements including all pages, your retirement accounts, asset accounts, and then pay stubs, 30 days worth of that if you were employed. And again, the 10 to 15 minute conversation that we'd have would narrow that down to see specifically what we need.
So what kind of things should you avoid that can hurt your ability to get a mortgage or to borrow the amount that you may need to buy a home?
Okay, so there's such a variety of that would be way longer than this tape would allow for. But up front, what you want to do is, if you're considering getting a mortgage, is work with your real estate professional, go with the referrals that they tell you to go talk to as far as lenders. They've already worked with these people. They know that they cut it to the quick. They don't waste your time. You don't want to get pre-approved with 15 different people. It's going to hurt your credit. The other thing is the don'ts. If you're starting to look for getting a mortgage, then you don't want to go buy a new car. You don't want to apply for credit with 3 different entities, like a car loan, something from Sears, and take a massive vacation where you increase your credit card debt. The other thing too is, what's important about that is, even if you're not sure if you qualify or not, definitely call me. Because like I said before, sometimes it's 2 weeks in advance of writing the contract, sometimes it's 3 years. Lots of times with identity theft being something that happens, unfortunately, too frequently in the market, we do want to know in advance if there's something on your credit that shouldn't be there. We run credit for free. We don't charge you for that. We don't share it with anybody else either. So that way we can start the process. And when you're looking for a home, especially in Hawaii on Big Island, right now we're in an environment where there are multiple offers being placed. And if we can get you pre-approved as opposed to pre-qualified, that helps you a lot to secure that property for you. So we'd want to do that as well.
So something we hear about in the mortgage world is debt to income ratio. What does that mean?
Okay, in a nutshell, what debt to income is, you've got your gross income that you make, that's before all your taxes and medical expenses and everything are taken out. And then it's versus how much you're putting out in your credit card payment, etc., stuff like that. We don't take into consideration utilities, child care, things like that. But again, you want to talk to a mortgage professional, and when they run your credit and gather the other documentation, they can tell you what your debt to income or DTI is. You don't need to be concerned over what that percentage is, because depending upon what program we're going to go for you, there's a different number attached. First-time home buyers have a lower debt to income ratio allowed than somebody that's buying a second home per se. So anyway, so just make sure you talk to your professional, and they'll be able to help you through that process.
And another thing we talk about a lot here is the uniqueness of Hawaii and the uniqueness of the market and the environment. And that's one thing that I always find very important, using a local lender that understands the market here. So one of the some of the things that complicate the home buying process from the lender's perspective that you may run into if you use, a Bank of America or Wells Fargo who is looking at this from the mainland and doesn't have a local perspective.
Yeah, absolutely. That's a huge part of my business. Absolutely, because I'm here and I've been here for 22 years doing loans here, so I know everything there is to know about encroachments, easements, lava zones, which I know everybody's heard about that in the news lately, and we are one of the lenders that is still lending in lava zone 2, and yes, you still can get insurance for that. There's additional requirements for those type of homes because they're, say, on catchment that you may not know about. But again, if you're working with somebody local, they know the ins and outs of getting it. We have a lot of homes here that have unpermitted sections. On the mainland, that would never fly. You'd never get financing. We have options for it here. So you definitely want to talk to somebody locally to compare, what you're doing, and especially if the house has any unforeseen issues, should we say?
Special issues.
Needs. If it's a special needs house. And our company has everything. We have first-time home buyer, we have renovation. If the house needs things, we're happy to give you the money to fix it up. You close on it, you do the renovation, you move into the perfect house exactly as you want. Construction, land, we do have everything. Condotel, which is a whole nother segment that we could cover. So anyway.
Any other tips?
The only thing that I do is, when I do these seminars with real estate agents and different companies, what I always say, and I mention it at least 15 to 20 times, get your borrowers pre-qualified before they get in the car with you. And the reason for that is, for you as a potential buyer looking to buy, you don't want to see a house that you fall in love with and then go talk to a mortgage lender and find out that you need financing and you qualify for $100,000 less than what you need to get that house. That's a scramble then. So talk to somebody, make sure you have your ducks all lined up, and then when you get in the car and you find the house that you absolutely love, your real estate agent can place that offer within 24 to 48 hours. You can get accepted within 2 to 3 days after that. And because you've already been pre-approved, the process is much quicker and your dream comes true within 30 to 45 days instead of 60 days plus because of issues.
So don't be offended if you call me and we start a conversation about buying in Kona. And one of the first things I'm going to ask is, what is your financing situation? Because if you tell me you're all cash, good to go. But if you need any type of financing, I'm always going to want to make sure that we start that process early, not because I don't believe you or I don't think you can buy, but because when you're ready, I want to make sure that we are ready and we don't miss out on the perfect property for you. So that's what Ronnie's really great about. I'm going to have her contact information in the description below if you want to reach out to her. But again, thanks you guys for watching. This is the Buy Big Island video blog. Oh, one more thing.
One more thing real quick. Dylan mentioned cash buyers. Keep in mind the cash buyers that are out there. It is great to go cash. It goes quicker. You usually get a better purchase price on that. But also consider that right now interest rates, even though the feds keep talking about hiking them up, and they did hike them yesterday, but they didn't hike them to the extreme. So take a look at your investment portfolios where your cash is being held. If you're making double-digit income on it, still talk to me about what rates are, because we're under 5% still here. So that may be something that you want to consider, where you don't pull all your cash out and lose part of your investment portfolio because of it.
Very good point. All right, well, as always, let us know if you guys got any questions. We're happy to help out. You can always ask questions in the comments below or email us. And again, I'll have Ronnie's contact information in the description. And thanks for watching, everybody. Aloha.
Aloha.